Hey everyone, Lee from Cetus Property Finance here. Welcome to the channel. I started this channel to provide my insights, first-hand experiences and guidance to help you steer through the ever-changing property finance and real estate market. I have plenty planned for future videos such as a first home buyer's guide series and how property finance can be used to achieve your investment goals. So don't miss out, hit the subscribe button and activate notifications to keep up with my latest content. In today's video, we will explore common assumptions in real estate and finance and how they may often be misguided. Let's start by going over why property price predictions from various banks and experts over the last year have turned out to be incorrect, in order to provide you an understanding of the factors you should consider when jumping into the property market. Historically, rising interest rates have resulted in falling property values, and as such, many banks and industry experts were predicting a price drop of between 20 to 30%. Last year, however, house prices in major cities only dipped 6.4%, which is a far cry from what they were anticipating. So, why hasn't the Australian housing market plummeted as they anticipated? Let's start by busting some myths. Firstly, it is important to understand that housing prices aren't always swayed by a constant singular factor, such as population growth. Various influences shape the property market and the significant shifts with time. At the moment, interest rates are dominating the conversation, overshadowing other factors such as the housing shortage and surging construction costs, which are counterbalancing the pressure interest rates are putting on property prices. Another example of this was experienced during the pandemic. Australia witnessed sluggish population growth but escalating house prices due to cheaper and easier financing. It is also a mistake to assume all housing markets operate identically. Prices may vary between cities and even neighbouring suburbs, driven by distinct factors like commodities in Perth or interest rates in Sydney and Melbourne. Sometimes smaller towns witness growth due to new business openings or fruitful farming seasons. While economic figures can and do influence housing, shifts in lifestyle and work habits matter equally. An example of this can be witnessed when consumer spending is down, you can still find shopping centres that are thriving due to population growth. All the booms experienced by beach towns along the New South Wales coast as a lot of people left offices during COVID and started working from home. The biggest misunderstanding in my opinion, however, is thinking the distinct nature of the housing market can be compared to financial ones. Like I mentioned earlier, many banks and industry experts predicted a 20 to 30% drop in the property market last year, which they've had to revise over and over by making this false assumption. Unlike the immediate nature of, for example, share trading, property transactions require time, months, which results in less market volatility. When thinking about whether or not to enter the property market, it's important to understand the relationship of these factors, not be swayed by a single factor alone. So, what's occurring now? Intriguingly, in the face of inflation and increased interest rates, global real estate prices are on the rise. And it begs the question, what's behind this trend? In Australia, the onset of rising interest rates did cause a minor downturn, however, this was offset by an increase in population growth. Now for the last 2 months, the RBA has decided not to increase the cash rate. This is being viewed as a sign that we've hit the peak of interest rate rises, and Australia is on the brink of delivering something which was thought impossible, beating inflation without a recession. Another interesting note is that just a couple of weeks ago, CBA stated that most of those loans on low fixed interest rate periods are ending this month. The reason this is interesting is because the mortgage cliff, as many were calling it, does not seem to have caused any distress in the current property market. We can see from auction clearance rates nationwide that the current market remains strong and is still favouring sellers. So, that's it for today's video. If you want a free home loan health check or property report to see how you're tracking, please feel free to contact me from the details below and I'll be happy to help you out. Hope you enjoyed the video. If you haven't already, please hit the like and subscribe button and I'll catch you guys in the next one. Thank you.